Hello, this is Patrick White from AA Commodities here in Spencer, Iowa with your market recap for this Thursday, July 25th. As you can see here, we had a lower day in the markets. We had September corn closing down 5.5 cents at 418.5. We had December corn closing down 3 1/4 at 427.5. November soybeans closed down 8.5 at 899 3/4, and September Chicago wheat closed up 1 3/4 cents at 499.5. Before we get started here, I'm going to go ahead and show you the disclaimer. Just remember, everything I say here is not a direct trade recommendation. It's just my opinion. If you'd like to read the full disclaimer, please pause the video now. All right, so getting on into the markets here, we had a pretty slow trading day here. We had corn down pretty significantly. We had some evident bear spreading, obviously with September here losing 5.5 cents, and all the deferreds were much less lower than that. Soybeans were a lot lower today here as well. We had just lack of Chinese purchases so far, affecting that market as well. And then September wheat, wheat was, fractionally higher to fractionally lower all day. It kind of chopped around. So on the weather side of things, the 6 to 10 day outlook really doesn't offer a whole lot. I mean, it's pretty normal. This is the heat side of things. It's warmer to the western corn belt and pretty much normal here. So it doesn't look like, there's going to be a whole lot of threat here going into pollination, and the chart's not telling us that either. So, we've got a little bit of heat coming in, but as far as the temperatures that are really going to hurt pollination there going forward at being above 100 degrees, stuff like that, it's just not evident at this time. We've got just a slightly warmer, slightly drier bias, but the next couple of weeks here is going to be key for pollination, and at this time it really doesn't look like weather is going to play a huge role in that. So another thing that we had out today this morning was the export sales report. Really, the only good news was for the wheat market. We had wheat export sales at 659,000 tons versus 200,000 to 450,000 tons expected. So, that was good for the wheat market, and that helped us give us our boost there as well. Corn export sales, as you can see, we only had 121,000 tons there, and that missed the low guess of 150,000 tons. We did get some extra new crop business, though, and that was good. But overall, it was soft for export sales for corn, and it was also very soft for export sales on soybeans. We had a net cancellation of negative 78,000 for the old crop soybean export sales, and we had some decent new crop sales, but soybeans overall really didn't perform. And then another thing as of another thing of note here is that the pork export sales were only 20,000. Or close to 21,000 this week, rather, and the trade was expecting a lot more than that. So going on into the charts here, we're going to take a look at corn first. So this is September corn. We've really gone down. It looks like we're going to test this 417 level. We tested it one time there on the 23rd of July, and we bounced back off of there. So really we're just searching for the bottom of the trading range. We have not found buyers yet in the corn market. So 417 is the first stopping area. If we break that, we should test that 413 level. And if 413 breaks, I'll get that out there for you guys, we should head back to these old highs here. This kind of the top of the range that we saw here this last winter at like the 401 level in September corn. So, we've got a lot to be reckoned with here going forward in the corn market, just because, that 417 level is key. If we drop that, then it's down to 413. If we drop that, we could be down to the low $4 mark. So something to keep your eye on, certainly. When you look at November soybeans here, really we've just been ranging, and we've had good support in like the 890s, the lower 890 level. But we really can't get legs, can't get legs underneath the soybean market here in regard to trade and demand issues and things like that. The supply excitement over the supply issue in the corn market really has not transferred over to the soybean market this year. So, seeing resistance in here at like the 920 to 940 mark, about every 10 cents up, you can tout resistance on the November soybean market. And today, we had a day where we tested higher and closed lower, and just really, buyers traders in general are getting, they're kind of discouraged and stuff about the lack of the Chinese soybean purchases. The private buyers were given permission to buy up to 110 million bushels of soybeans tariff free, and we have yet to see those purchases come through. So, the longer they wait, the more nervous the trade gets, and just by and large, we've just been consolidating essentially since we made that high June 18th. We've just been consolidating in a sideways fashion. If we were to break lower, if we were to get a solid close below the 895 to 890 level, I would look for slide down to 880 and then possibly down to that 870, 860 mark. So you can about tout resistance every 10 cents up on beans and every 10 cents down for support. But yeah, certainly if this 890 level breaks, that'll be like, so where my cursor is right now, the horizontal cursor, that's where 890 is. If we get below there, pretty much everybody that's long from June 12th would be underwater, and we could see some further long liquidation there. Going on into the wheat market here, kind of an interesting trade. We went up and we tested higher with the corn market, and as the corn market's been ranging, the wheat market hasn't been able to get legs underneath it really yet. I guess we broke down to the $5 psychological support level in September wheat there, and we rallied above it, and they tried to get above the 502 mark today, and they closed right at 499. They closed right at 499 and a half today, and we couldn't get above that $5 mark. So if we could get a solid close above the $5 mark, it would look really good technically for the wheat market. However, at this time, the selling is still evident. So there's still sellers there. There's still resistance at the the 505 to 502 level, and if we can get above that, on these further Russian crop cuts and things like that, we still need more bullish news to come out in order to rally this market. But as long as we stay below 502, we're probably going to continue our downtrend. And August live cattle here, kind of an interesting trade. We went down and we made our little W bottom, and we've rallied from there. We've seen resistance up at like the 109.5 level, 109.40, and we've been turned away since. So I would look for a choppy, consolidating type of trade there. And I think that we'll probably support in here in the near term between 107.30 and 107.50, and they'll have resistance at like the 109.5 to 110 level. That being said, if we did break above it, I would expect it to go right back to these old lows here that we saw in November at like 111, the 111 area. So that'd be a good target here in the near term. And going into August hogs here, this will be the last chart that we look at today. We've seen a decent rally, in the hog market, but like I said here, that export sales report that we saw this morning with the 21,000 tons exported, that's a lot less than what the trade had expected. So we were only down about 60 cents here in August hogs, but like the deferreds were down over $2. So pretty big break in the deferred contracts. The nearbys are hanging in there. But yeah, with that being said, we've seen a good run up. Tomorrow's going to be a big day, whether or not they can hold this 85 level. We went down there, we closed today at 85.95. So yeah, if they close, especially below Thursday's low, we could slide down to that 82.5 mark. We'll call it 82.50. But with that being said, though, if they do want to take this thing higher, we should find resistance at the $90 mark. And if you look, that's been tested 1, 2, and then 3 times. We broke below it and tested it again and failed. So I think there's really good resistance up there at 89.60 to 90. And if we do break down here, I would look for support at 82.17. So that's all I got. If you guys have any questions or want to talk markets, give me a call here at 712-262-7606, and have a great day. Thank you.